In the worlds of healthcare and tech, some of the most interesting companies are the ones that kind of hide in plain sight. And that brings us to Tempest AI. On the surface, it looks like a pretty standard medical lab. But if you look a little closer, you'll see it's building something that could be way, way bigger.
So that really is the central puzzle here, isn't it? Is Tempest AI just another lab running tests? Or is it a truly revolutionary AI company that's just wearing a lab coat as a disguise? As we're about to find out, the answer is complicated.
Because, get this, on one hand, it loses money on paper just like a high-growth, burn-the-boats startup. But at the exact same time, it's creating one of the most valuable biological datasets on the entire planet. So what's the deal? All right, let's dive in and really unravel this thing.
Okay, so to really get what Tempus is doing, we'll have to understand its engine. They call it the Intelligent Diagnostics Flywheel. And honestly, this is the secret sauce. This is the mechanism that turns a simple, everyday lab test into an unbelievably valuable data asset.
So here's how it works, step by step. It all starts when a doctor orders a genomic test for a cancer patient. Pretty standard stuff. But here is the critical difference. A normal lab just sequences the sample. Tempus, on the other hand, uses AI to ingest and structure the patient's entire clinical history. We're talking everything. Then, this combined data, genomic plus clinical, gets de-identified and added to their massive library. And here's the payoff. The big pharmaceutical giants license this incredibly rich data to make their own drug discovery pipelines faster and smarter. So you see, every single test literally feeds the machine.
So what you end up with are two very different businesses living under one roof. First, you've got the genomics segment. Think of this as the supply side for the data. It's got lower margins, around 40 to 50%, which is pretty typical for a lab. Its main job is just to acquire that precious proprietary data. But then you have the data and services segment. This is the insights business. And this part, it's a high margin, beautiful, software-like business that monetizes that data with recurring predictable revenue. The lab is basically the fuel for the AI fire. Now, when you have a business model this good, you're going to attract a lot of competition. So how does a company like Tempus protect itself? Well, they do it by building what investors love to call a data moat, a competitive advantage that's just incredibly difficult, if not impossible, for anyone else to replicate. And they've been doing it with some really smart acquisitions.
And this moat wasn't built by accident. It was built very strategically. Take 2025, for example. They bought two absolutely critical companies. First was Page AI, which digitizes pathology slides. This literally gives their AI the ability to see cancer in tissue samples. Then they snapped up Ambry Genetics, a huge player in hereditary cancer testing. This added a whole new layer to their data, the genetic risk someone is actually born with. And this really hammers home their unique position. I mean, when you combine genomic data with clinical records and now with pathology images, you've created a data set that nobody else has at this scale. They are truly seeing the whole patient picture in a way their rivals just can't. All right, so how does this really unique model stack up against some of the other big names in the space? Because this is where the story starts to get really, really interesting. So let's take a look at the competitive landscape. You've got Guardant Health. They're the leader in blood tests or liquid biopsies. You could think of them as a liquid factory. Then you have the incumbent, Foundation Medicine, which is owned by the pharma giant Roche. They're like a traditional lab, but with massive scale. Tempus, though, it's a totally different beast. Its model is an AI factory that is constantly fed by its own labs. And that vertical integration gives it a huge leg up on data capability. And you know what? We're starting to see some serious signs of strain in that old guard. Just look at Roche, the owner of Foundation Medicine. They've had to write down hundreds of millions of dollars in value from that business. First, $122 million, then a whopping $644 million. And what's the reason they gave? Increased competition. The subtext here is crystal clear. The old traditional lab model is really struggling to compete with a data-first company like Tempus. Okay, so we've got a great business model, a strong competitive moat, but can it actually make money? Let's turn to the financials, because Tempus is standing at a really important inflection point right now. First off, just look at this revenue growth. It is absolutely explosive. I mean, they hit over $500 million in 2023, and they're projected to more than double that to over $1.2 billion in 2025. That's just phenomenal acceleration.
But revenue is only part of the picture. The margins are what really prove the business model is working. Just a couple of years ago, their gross margins were down around 40%. Again, pretty typical for a lab. But as that high-margin data business becomes a bigger piece of the pie, look what happens. They've shot up to nearly 63%. We are watching a lab company transform into a high-margin software business right before our very eyes.
And if you need just one single metric that proves how valuable this data platform is, this is it. 140% net revenue retention. For anyone who follows software as a service companies, you know that is a world-class, absolutely elite number. It means their pharma clients aren't just sticking around. They're spending 40% more money this year than they did last year. That tells you this platform is becoming indispensable. It is incredibly sticky.
So you might be thinking, if everything's so great, why does the company still show a loss on its income statement? Well, this all comes down to a really key accounting difference. The official paper loss includes massive non-cash expenses, like stock-based compensation for employees. But if you look at a metric that's much closer to actual cash flow, something called adjusted EBITDA, you see a very different and much, much healthier picture of the business. And here it is. This is the inflection point. In the third quarter of 2025, for the first time ever, Tempus became profitable on an adjusted EBITDA basis. That is a huge milestone. It means the core operations of the business are now generating enough cash to sustain themselves.
So, let's put it all together. We've looked at the business model, the competition, the financials. So what's the final verdict here? Well, it's pretty clear that Tempus is a classic high-risk, high-reward bet on this one big idea, that the future of medicine will be built on data. The case for being bullish on Tempus is pretty compelling. First, you have to see it as a data infrastructure company, not just a lab. Its data moat is wide, and it's getting wider every day. The business model is now proven to work, hitting that positive adjusted EBITDA mark. And with over $764 million in cash, they have a fortress balance sheet to keep executing on their plan. But of course, there are definitely real risks to think about. The company pays its people a lot in stock, which can dilute the value for other shareholders. The founder also has majority voting control, which can be a red flag for some investors. And then there are always the external risks, like new FDA regulations or the chance they could lose one of their big pharma clients. This quote from the analysis just sums it up perfectly. Investing in Tempus is a bet on the digitization of oncology, plain and simple. It's a bet that this is the future and that Tempus is leading the charge. And it seems the market agrees. The valuation is, well, it's not cheap. The stock is currently trading right around what analysts think its intrinsic value is. And what that means is that investors are already expecting near-perfect execution from the company. There's not a lot of room for error priced in here. So if we boil it all down to one crucial point, it's this. Tempus has pulled off something amazing. They've used a lower-margin traditional lab business, almost like a Trojan horse, to build something far more powerful and valuable, a high-margin, sticky, and nearly impossible-to-replicate data asset that could completely change how we discover new medicines. And that really leaves us with a fascinating question to ponder for the future. In this new era of AI, is it possible that the companies that own the best, the cleanest, the most complete biological data, companies that look a lot like Tempus, will they become the new giants of medicine?